What is going on, everybody, and welcome back to Today Assets Report, the channel where we break down what is actually happening in the market so you know exactly where things are headed. I am so glad you are here today because what we are about to go through is genuinely one of the most important updates we have covered in a very long time. We are talking about a full-on regulatory overhaul of the crypto space right here in the United States, and the people making these announcements are not random commentators or Twitter influencers. These are the actual top regulators in this country, and what they are saying right now is nothing short of historic. We are talking about the CFTC, we are talking about the SEC, and we are talking about real concrete plans that are being laid out in real time. If you own XRP, if you own any digital assets at all, you need to hear every single word of this video because this changes everything. So let's not waste any time, let's get straight into it. Now, the first thing that has to be said is this. For years, the biggest obstacle holding crypto back in the United States was not the technology. It was not a lack of interest from institutions. It was not even a lack of money waiting on the sidelines. The single biggest obstacle was regulatory uncertainty. Institutions could not move into this space confidently because they did not know the rules. They did not know what was a security, what was a commodity, what was allowed, and what would get them hit with an enforcement action out of nowhere. That paralysis kept trillions of dollars on the sidelines. But here is the thing, that era appears to be coming to an end, and the people who are ending it are saying so publicly, loudly, and with a level of detail that is genuinely unprecedented. And right now, the CFTC is leading the charge in a way that would have seemed impossible just a year ago. Lee Yus talks specifically about what is being called Project Crypto. And this is coming directly from the Commission itself. This initiative is being described as a historic effort between the CFTC and the SEC to work together, modernize their rules, and future-proof them not just for crypto and blockchain, but for emerging technologies across the board. Think about how different that framing is compared to what we were hearing before. Before, we had two agencies fighting over turf. We had regulation by enforcement, we had firms getting sued for offering software products that simply allowed users to hold and transact digital assets. That was the environment. Now we have these same agencies saying, look, we need to stop being prescriptive. We need to stop forcing firms to rely on outdated systems. And we are going to build a clear taxonomy that tells the market exactly what is a security and what is not. That is huge. That is the kind of clarity that institutions have been begging for, and it is finally being delivered. One of the most exciting things coming out of these announcements is something that might not sound flashy on the surface, but is absolutely massive for the market: perpetual futures contracts being brought back to the United States. Now, if you have been paying attention to the crypto derivative space, you know that perpetual futures have been a dominant trading product globally for years. But because of the regulatory environment under the prior administration, all of that liquidity migrated offshore. We are talking about exchanges in Asia, Europe, the Bahamas, anywhere but here. That drove capital activity and jobs out of America. And now the CFTC is saying we are working to bring true perpetual futures contracts back to the US within the next month. That is not a vague promise. That is a specific, near-term commitment from a sitting commissioner. When that happens, the liquidity implications for the entire digital asset market, including XRP, are going to be significant. And it does not stop there. On top of the perpetual futures announcement, the CFTC is also moving toward providing clear guidance on digital wallets. Think about what the prior administration actually did. They went after firms for offering software that simply allowed users to access blockchain networks, basic wallet software, front-end interfaces. They tried to rope all of that into their regulatory framework, and it created chaos. Firms did not know whether building a basic user interface made them a regulated exchange. That kind of environment kills innovation. It kills development. It drives builders and entrepreneurs to other jurisdictions. And now the CFTC is stepping up and saying, we are going to draw a very clear line between what implicates our regulations and what simply does not. That announcement is coming very soon, and it cannot come fast enough for this industry. Now, Lee US layer in the DeFi angle because this is where things get really interesting for a lot of you watching. Decentralized finance protocols have been in a legal twilight zone in this country for years. The prior administration famously went after prominent DeFi firms, including Xerox, characterizing open-source software systems as exchanges or brokers. Just think about that for a second. Software that runs autonomously, that no single entity controls, being classified as if it were a traditional financial intermediary. That legal posture was devastating for the DeFi sector and for the entire crypto ecosystem by extension. Now the CFTC is signaling clearly that they are going to modernize their framework to accommodate on-chain software systems. They are acknowledging that there is a spectrum of decentralization and that a one-size-fits-all enforcement approach is the wrong way to handle it. That is a fundamental shift in philosophy, and it opens the door for an enormous wave of legitimate DeFi development right here in the US. Here is what really gets me, though. Here is what makes this moment feel almost surreal. Every single major regulator is now publicly saying that crypto is the future of finance. They are talking about innovation exemptions. They are talking about bringing liquidity back home. They are talking about clear rules of the road. And yet the market is sitting here in this strange, painful quagmire where prices are struggling and sentiment is weak. You would think that having the nation's top financial regulators on your side would be the most bullish signal imaginable. And in terms of the long-term setup, it absolutely is. But markets in the short term are irrational. People are distracted by macro concerns, by geopolitical noise, by fear. And so you have this extraordinary disconnect between the fundamental picture, which is getting better by the day, and the price action, which is not reflecting that yet. But it will. These things always catch up eventually. Lee US talk about something that is going to sound incredibly exciting to anyone who has been following the technology side of crypto rather than just the price action. One of the commissioners made a point about the future of financial settlement that genuinely gave me chills. We are talking about the evolution from T+5 settlement, which was the standard back in the 1980s, where it took 5 full business days to clear a securities transaction, to where we are heading now, which is essentially T0, or instant on-chain settlement. Just imagine that. You execute a transaction and it settles immediately on-chain. No counterparty risk sitting in a 5-day window, no failed trades, no clearinghouses taking their cut for managing the delay. This has been a dream of the financial services world for decades, and the technology to do it is here right now. The infrastructure is being built as we speak, and regulators are starting to build frameworks that can actually accommodate it. Now, here is where XRP and Ripple specifically come into this picture in a very meaningful way. It was directly mentioned that Ripple is working with BNY Mellon on tokenized bank deposits. Let that sink in. BNY Mellon is one of the oldest and largest custodian banks in the entire world. They manage trillions of dollars in assets, and they are actively working with Ripple on tokenized bank deposits, which is essentially one of the most critical pieces of the on-chain settlement puzzle. When tokenized bank deposits go live at scale, you need a fast, reliable, low-cost settlement layer underneath them. You need something that can move value instantly and with finality. That is exactly what XRP and the XRP ledger were designed to do. This is not speculation. This is not hopium. This is a live partnership between Ripple and an institution with over $40 trillion in assets under custody. That is real. That is happening right now. Lee used shift gears and talk about the legislative side because there is a lot happening there too, and it directly affects the timeline for everything we just discussed. The stablecoin bill, specifically the Genius Act, has been one of the central pieces of legislation that the crypto community has been watching closely. And the latest update is that things are actually very close to a deal, even though the road has been bumpy. The main sticking point has been this battle between Coinbase and the banking industry over whether stablecoin issuers and digital asset platforms should be allowed to offer yield or rewards on stablecoins to their customers. Banks hate this idea because it competes directly with their deposit base. Crypto companies love it because it creates utility and incentivizes adoption. That tension has been holding up the bill, but people in the room are saying we are getting very close to a compromise. And here's the thing about negotiations. When both sides are saying they are not totally happy, That is usually a sign that a deal is genuinely close. That is how compromise works. Nobody gets everything they want, but everyone gets enough that they can live with the outcome and move forward. The White House has been actively hosting meetings over the past month trying to broker exactly this kind of compromise. And the crypto side has reportedly made significant movement toward a middle ground. Now the pressure is on the banking side to reciprocate. There was a very pointed statement made publicly. Crypto has come to the table. It is time for the banks to do the same. And with the legislative calendar ticking and pressure mounting from both the House and the Senate, the window to get something done is real, and it is now. Now there is also a backup plan being floated that is worth paying attention to. Representative French Hill, who chairs the House Financial Services Committee, made a pretty significant statement at the Milken Institute Future of Finance Summit. He said that if the White House compromise on stable coin yield falls apart, Congress should simply move forward with the original House bill, the July 2025 version of the Clarity Act, which already passed with overwhelming bipartisan support, 294 to 134, including 78 Democratic votes. That is not a partisan bill. That is a bill with real broad support across both sides of the aisle. And if the deal over stablecoin rewards cannot be struck, that original bill is sitting right there ready to go. The market needs that legislation, and the people in power know it. That is why the urgency in these conversations is so real. Let us also talk about the broader shift in regulatory tone, because I think it is easy to focus on the specific policy announcements and miss the bigger picture. We have gone from an administration that weaponized regulatory enforcement against crypto companies, suing first, asking questions later, to an administration that is openly, enthusiastically embracing the technology and racing to build frameworks that let it flourish. The number of regulatory guidance documents that have been issued in just the first couple of months of new leadership is staggering. Guidance on proof-of-work mining, guidance on proof-of-stake, guidance on stable coins, guidance on meme coins, guidance on markets. Each one of these is a signal to institutions that the door is open, the rules are being written, and it is safe to come inside. And the market is responding. Grayscale, for example, launched more ETFs in the past year than in all previous years combined. That is what regulatory clarity actually looks like in practice. I want to take a step back for a moment and really emphasize something for the people who are feeling frustrated right now. If you have been in this space for a while, if you bought XRP or other assets at higher prices, and you are sitting on losses right now looking at this market and wondering when it is going to turn, I hear you. This is genuinely one of the strangest disconnects I have ever seen. The macro backdrop for crypto, specifically from a regulatory and institutional adoption standpoint, has never been stronger, not even close. And yet prices are not reflecting that. The sentiment is low. The news cycle is noisy. People are scared. But here is the thing about moments like this. This is exactly the environment where life-changing setups are built. When the fundamentals are exceptional and the price is suppressed, that is the opportunity. The people who load up right now when nobody else wants to be buying are going to look like geniuses in 12 months. There is something that was said at the end of one of these regulatory conversations that I want to close on because it really captures the stakes here. The point was made clearly and bluntly. If we do not get the right legislation passed, if we do not create the framework that allows this industry to operate with confidence in the United States, then we are not just delaying things a little bit. We are looking at potentially years before we get back to this point. Years. Think about what that means for the industry, for innovation, for American competitiveness in what may very well be the most important financial technology revolution of our lifetimes. That is why getting the Clarity Act done, getting the stablecoin bill done, getting the CFTC guidance finalized, none of this is optional. It is all critical. And the fact that we have regulators who understand that, who are saying it publicly, and who are working urgently to make it happen, that is the most bullish signal of all. Stay patient, stay informed, and stay with us here at Today Assets Report. We are going to keep covering every single development as it happens. Thank you so much for watching. Make sure you hit that like button, drop a comment below with your thoughts, and we will see you in the next one.